Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I'd like to do a follow-up video from my last video focusing on index funds or exchange traded funds that are good for new as well as established investors to follow an underlying index. This time I want to focus on ETFs that have a very low cost of operation. You guys may or may not know that all ETFs charge a fee of operation. They are a way of passively following an index, but they do not unfrequently change their portfolios, and in doing so, they incur costs as well as some management oversight costs as well. So I kind of wanted to focus on some ETFs that have a very low cost, and a lot of these costs aren't directly known to the investor. You don't get charged an extra fee per month or per year. It's simply taken out of the overall fund's assets, so the rate of return will be impacted, but you won't necessarily see that unless you read the detailed information about each of these funds. You won't see that here in Robinhood. You'll simply see a rate of return on your investment, but you won't see the fees being taken out. So I thought I would focus on 5 different ETFs here that have some of the lowest costs that I could find. And some of these are identical to the other very large ETFs that I talked about in that last video. So the first stock here, SCHX, a Schwab fund. As we go to the bottom here, you can see this is just an index fund here tracking a market cap weighted index of 750 of the largest U.S. companies. You can see it's a very large fund, $8.63 billion. Good dividend yield, 1.906. And the key behind this fund is that the fee is only 0.03% per year, so a very, very low cost of operation. Likewise, another 0.03% fund here is the iShares Core S&P Total U.S. Stock Fund. Again, a ETF that's simply following an underlying index. You can see on the bottom here, market cap weighted index of all common equities listed on the New York Stock Exchange and the NASDAQ. You can see another very large fund, $8.47 billion, a good dividend yield, 1.854. Like I said, the fees on this one are 0.03. So very low cost of operation. And I should mention as well, you can see here that like the other funds I talked about, since they're following typically S&P 500 stocks, a very good rate of return, but essentially identical to the overall S&P 500, 19.48 and 94.55 you see here for the 1 and 5 year graphs, as well as this iShares Core S&P 19.68, as well as 94.74 over the last 5 years. So essentially identical to the underlying S&P 500 for both of these stocks. And stock I talked about last video, VTI here, Vanguard Fund, a very large fund. If we go to the bottom here, $77.68 billion, good dividend yield, 1.86, and for this fund the fee is 0.04%, so a little bit higher than the last fund, but again, very, very low. A lot of mutual funds will charge anywhere from 0.5, 0.6 up to 1 to 1.5%. So you can see these funds are very, very low cost, and this is why a lot of investors, including myself, are shifting a lot of my assets, a lot of my other investments from mutual funds to low-cost ETFs that are simply tracking an underlying index. Another fund here, IVV, another iShares fund. Again, another S&P 500 index fund. You can see on the bottom, very large fund, $108.77 billion, 1.954 for dividend yield. I think I might have talked about this stock on my last video. And again, you can see the 1 year and 5 year performance is simply following the overall S&P 500 because, again, it's following an underlying index. But another very good ETF for new investors as well as established investors with a very low cost fund here. And one more 0.04% fund here, another Schwab fund. You can see on the bottom here, this is a ETF tracking Dow Jones U.S. Large Cap Growth Total Stock Market Index, as well as 750 of the largest U.S. companies by market cap. You can see another relatively large fund, $4.05 billion, a good dividend yield, 1.079, and again, a very low cost fund. And if we do the 1 year and 5 year, you can see this is actually performing a little bit better than the S&P 500 underlying index. But again, this is following a little bit different index here. You can see it's following the Dow Jones U.S. Large Cap Growth Total Stock Market Index, not the S&P 500. So a little bit better than the underlying S&P 500 index, but fairly close. So here are 5 very good ETFs for new investors, established investors who have very low costs associated with them. So again, SCHG here, IVV, VTI, ITOT, and SCHX. So kind of with that, I'll end the video. As always, if you enjoy my videos, feel free to like, share, and subscribe. And again, if you guys have any good video ideas, any topics you want discussed, let me know and I'll do a video about those. Yeah, until next video, we'll see you then.